No, the entrepreneur or a good entrepreneur is a very different beast. And I'll tell you in what way he's a different beast. So you have dreamers and you have doers, right? And the entrepreneur is this one guy who's got a mix of both.
Again, about moving forward with failure, with rejections, and beyond yourself and your social gatherings to be able to become an entrepreneur. I think only then an investment opportunity would exist.
There is a problem that somebody is trying to solve, and that translates to the market opportunity. And it also means some amount of consumer education. And very often we've invested in B2B. So it also means market development. We tend to invest in innovative startups.
Hey guys, welcome to Ashish Janiani. It's my pleasure to be the bridge between some great, amazing investors and sales trainers of the world and you, and bring out the information that you need. I know that if you're an entrepreneur or in sales, most salespeople are entrepreneurs, right? In some way or the other. You've thought about these two things is how I came up across, merging investments and sales together to bring it out to you. I believe you should be good at sales. And I believe that you should understand if your business needs funding or not. Okay. Most startups, most entrepreneurs do not understand the 360 degrees of this is the reason why they fail. So think about these interviews from a knowledge perspective, take notes and listen to these experts because they genuinely are. Today's guy is no less, of course, it's a privilege to have him on the show. Mr. Ashwin Raguraman is the founder of Bharat Innovation Fund. It's a deep tech-led fund which focuses on investing in startups with deep technology. And he looks forward to helping entrepreneurs at every stage that he can, is the reason why he's doing the show with us today. So help me welcome Mr. Ashwin Raguraman on the show. Hi, Mr. Ashwin. Good evening. How are you?
I'm good. How are you, Ashish?
I'm doing good. And thanks for joining us. It's a pleasure. It means a lot to the entrepreneurial community because of the questions that you'll be answering today. It's going to really help them out. Our goal today is to give them the 360-degree picture of investment, funding, and startups. And there are very few people who can open up the way you would to us today. So it's a privilege. But first of all, let's start with you and understand, how did you become an investor? Was that always a plan in your story, or it just happened, how startups also sometimes just happen?
So first of all, Ashish, thanks for being here. Good to be chatting with you and trying to talk about what's happening in what I'm seeing is happening in the entrepreneur ecosystem. An interesting question. I had no clue I was going to be an investor. And, there used to be this website a long time back called Stumble Upon. I don't know if it still runs, but you just go there and you click this button called Stumble Upon and it sends you to some random website. If you're interested, you stay on it, you browse it. If not, you click on Stumble Upon and, it takes you to another one. And so I think I stumbled upon becoming an investor. I started off life doing something very different. I sort of graduated my engineering and I was like, hey, I need to stop studying for a bit. I want to work. I want to make money. I want to see the world. And there was only one opportunity that let me do that. And I joined this company called Maersk and worked on their oil tankers. So I was actually sailing their ships and did that for a bit of time. Got to see a little bit of the world. Got a little bit of freedom from, being at home. First time out. Very interesting, but also I was put in very difficult situations very early in my professional career. In terms of just, being out, a very different type of lifestyle and so on, and learned a tremendous amount. And so that was my sort of rebellious nature, which early in my career told me, don't go into software, don't go and do some business school degree, go and do something different. So that was where it started. And then I did a few other things before I honestly got this opportunity to set up a fund. Somebody was thinking about it. This was an idea that NASSCOM had, which was to set up a fund or a venture capital fund that would promote deep tech startups out of India at a time when deep tech was not even a word in India. So we used to call it IP-driven startups. And it was a thought in somebody's head. We said, let's go get it out there And this was back in 2009. And I said, wow, this is a fantastic opportunity. I really like the thought of doing something like this. Set it up and thought I'll wash my hands and walk away from it when a board, which incidentally I had set up, said, you've been so involved in setting it up, why don't you also cross over and start being part of the investment team? And I had sort of got a taste of startups by then. And once you've got that taste of startups, it's hard to let go. And so it seemed like a very interesting opportunity. And so, to be honest, I didn't take the typical career path into investing, which is often consulting gigs and then move into a VC fund or become an entrepreneur, be a successful entrepreneur and partner at a VC fund. I took a fairly unusual route to this. And well, here I am, my second fund and well into it at this point of time. So it's good.
Wow. Wow. I like the way you spoke about Stumble Upon. I've never heard of the website, but we should check it out, right? A lot of entrepreneurs have stumbled upon being entrepreneurs due to the pandemic. I know a lot of them because they lost their jobs, or their current businesses were not working, and an entrepreneur also figures it out. So going from one business to the other business as a solution. And I think it's important for them to know this, that sometimes you stumble upon where you are today. And let's say we are speaking to these entrepreneurs. Let's first talk about why investment. Okay, so when I have a startup as an entrepreneur, what is an investment? Like, is it something that I should look as a target, that I need to go to the market to find an investor because everybody else is? Or investment also involves other non-tangible items of team and time and other things that we build together? So if you can show and throw and highlight on what an investment actually means for a startup.
Yeah, I think that's a great question. But I also want to first amplify something that you said very interestingly, which is the application of startups and stumble upon in a startup context and entrepreneur context, right? Look at so many of the unicorns that have recently emerged out of India, be it a Paytm, be it a Flipkart. All of these guys started off doing something very different from what they ended up doing. InMobi is another example. They started off as a company called mCoach, and then pivoted. And so pivoting is very often something that startups do to reach a certain level of scale that they may want to, which is, if you want to become a unicorn or even bigger, that has happened in the journey of many startups. And I wouldn't say that they've all stumbled upon the pivot, but something in their journey has forced them to sort of recalibrate their path. And perhaps their first effort was what they stumbled upon, but then as they grew and wanted to scale up, they had to tweak their business plans. So one very important lesson from that is don't think too much about what you will be at scale. Think about getting going, start executing. You have a dream, start executing. That's what I tell most people who have ideas. Otherwise, you'll never know if it will work, right? And so coming back to your other question, right, on investing and what does it take and how should an entrepreneur think about investment is I think there's so many dimensions to that question, right? And I think the first question is, should you raise external money or not? It's a very, almost an existential question to answer, which is based on the type of founder you are. And I know there are people who've been part of generations of family business and are perhaps the latest in that generation. And they've got to realize that an investor-driven business is very different from a family-owned business. And the whole thing, I won't call it investor-driven, but let's say a VC-supported business. The dynamics are very different. The way it's managed is very different. There are very different governance norms that are set about. I think so that's one part of the question. Do you raise external money or not? The second is, who do you take it from? Then the third question is, when do you take it? And like that, there are so many questions to answer. But if I were to make one sort of, the key point that would perhaps encapsulate my entire thinking around this, it would be that all of these are very, it's a horses for courses type of a model. Some entrepreneurs need investments from outside. And similarly, the timing is very specific based on startups, based on the market, based on your offering, based on where you are as in terms of product market fit. so many factors. So everything is specific to you. And the only way you can try and arrive at a clear answer is look around and look at 100 other startups and see what they've done correctly and incorrectly, or things that have worked and not worked, and use those learnings, apply it in your own context. And I think the key around investment is two things. If you got something that you think is really great, it's very difficult that you will have the financial, or harder for you to have the financial resources to see it scale up rapidly and get to where you want when there is still a window of opportunity in the market, right? The market doesn't wait forever for solutions. So you've got to be out there, get there rapidly and move quickly. And for that, you may need capital. The second is you always need help. And there are a ton of bright young guys even in their early 20s today who are putting out startups. And, for somebody who's not even seen the professional world or hardly seen it, you're going to need help. And sometimes the investor community can help you just by being a sounding board to you as you think through your startup, draw upon their experiences with other startups and so on. And even if you're a professional who's been part of a large company and exiting to create your startup, these are two very different worlds. And therefore, the ability to have an investor who will be able to guide you through those early, hard, strenuous days, or to at least be there for you as somebody who you can have a conversation with and brainstorm on your thought processes, I think is the biggest value add that you may get. I mean, apart from things like connects to customers and other funds, and these are, I think any fund out there provides those. But the first two are why I would imagine, or what make a strong, compelling case to go out and raise money and get an investment into your startup.
Okay, wow. So I'm going to club two thoughts I have, from what you said. And I think that's important for entrepreneurs, including me. You spoke about these entrepreneurs who did not plan to have unicorns, eventually ended up creating, and they stumbled upon business after other. And it's about going forward. It's about pursuing the goal that you have. And you also spoke about, the window of opportunity that we have when we are raising funds or when we are looking for investment. Okay. I have seen, if I, you have more experience than me, that entrepreneurs think too much. And I've seen so many times an entrepreneur just kind of sit and think and not execute a sales call or execute that website to be better, do those things that will move the business forward. Can you throw some highlight about how important it is, again, about moving forward with failure, with rejections, and beyond yourself and your social gatherings, to be able to become an entrepreneur? I think only then an investment opportunity would exist, and it even makes sense to think about a business if you can pass these barriers.
Absolutely right. And there's the entrepreneur, or a good entrepreneur is a very different beast. And I'll tell you in what way he's a different beast, right? In my mind, at least. And I've tried to sort of dissect this a little bit. There's people who are either dreamers and who keep thinking, and maybe pass on their ideas to somebody else, or, in a larger corporate setup, you're somewhere, you have a bunch of other people to get going and doing stuff. And then there is another set of people who have a lot of doing skill sets. So you have dreamers and you have doers, right? And the entrepreneur is this one guy who's got a mix of both. He's got the ability to dream and set up a vision for his startup and inspire other guys, right, to join him when he's hardly able to pay them anywhere close to market. But it's just the beauty of the idea, or the differentiation, or that ability to inspire as a person. And so he's got that dreamer characteristic, but he's also got the doer characteristic, because if you can't execute as a startup entrepreneur or founder, you're doomed. And there are so many good people with good ideas. I think ideas, everybody says, dime a dozen. How well you execute on those ideas is what really sets you apart. The other part, see, I spoke about one dichotomy which exists under the single, brain of a entrepreneur, so to speak. But an entrepreneur is always faced with dichotomies. You listen to these ton of people who are giving you advice, but how do you throw away the ones that are not going to help you how are you going to be a little bullish or a little bit, I would say bullheaded, right? And thick skinned. And at the same time, you want to be listening to other people's inputs, right? These are hard contradictions to resolve. And the good entrepreneurs do these well, right? You will be one day dealing with an HR issue where an employee of yours is saying, hey, my mother's ill, I need to be out for 15 days. And you're like, my God, if this person goes, our product development plan is like now pushed out another 15 days because they're so key and you don't have somebody else to go to. And the next minute you're having a conversation with an investor and you're trying to raise capital. The third minute you're having a conversation with a guy who's sitting in some government office and not sitting on your file and not giving you a clearance that you want, right? And you got to do all of these, and all of these take very different skill sets. So I guess that's the challenge. And the only way to be or deal with that is you got to be a thorough optimist. And at the same time, you got to stick to it. You got to be extremely persevering. And I've seen that many entrepreneurs, I think every single entrepreneur must have gone through really tough days in their journey, right? Where they're almost, the existence of their startup has been at question. And the guys who have made it are the guys who are more the survivor category than the guys who had it easy from day one and they had it all sorted out. I don't think there's any such thing. You can't plan for some things or some challenges that you deal with. You got to react and react quickly.
I think every person who's gone through rejections in their life and who has a point to prove, uh, you would relate to this and you have a potential to be an entrepreneur. And I think every entrepreneur's got that a point to prove about, and I think they've got a point to prove to themselves. Uh, and business is a way to prove that point, because there's a point that they're trying to make sense of. And I think these difficulties bring those character out in a person. And you're talking about character, that an entrepreneur should have.
You're right, but let me also say something. It's a very interesting point that you made, right? But things have also changed. And I'll tell you how they've changed. When I set up my first fund, people were scared to get into entrepreneurship. I mean, there were enough people who faced rejection, who wanted to prove points, but they didn't want to get into entrepreneurship because I'll tell you honestly, people were not willing to give their daughters in marriage to a startup founder, right? It was that bad. Today, you have India has changed so much that there's every guy who's the cream de la cream from an ID and IM is thinking a little bit more about entrepreneurship than anything else. So are professionals in large institutions or large corporates, to be honest. And so what has happened is, apart from the fact that you want to prove a point, there is a certain level of sexiness that has come into being an entrepreneur, right? And so it is A plus B now, whereas it was only about proving the point some time back. This is actually, there is adulation today for entrepreneurs, which didn't exist 10 years back. And therefore, you do feel a little bit better about yourself as an entrepreneur.
Is that a good thing or a bad thing? The sexiness around entrepreneurship.
I'm glad you asked me that. It can be both. And I'll tell you why I say that. I think a lot more entrepreneurs, therefore, a lot more startups are getting created. A lot more people want to become entrepreneurs, and therefore it's good. The guys who become entrepreneurs are also motivated to stay the path a little bit longer because they like it. They enjoy some of this other attention. But I do think that what has happened as a result of all of this is also that there's a little bit of noise that is getting created in the ecosystem, and people haven't really thought through the challenges of you see some of the good parts of it. You don't see you hear about the success stories, less about the failures. And as a result, it's a little bit glorified and you jump into something that perhaps you are not suited for and may not fit the word you used, right? Your personality. And therefore, giving it a good sort of thought, trying to understand it well, speaking to people who've been there is a good starting point before you jump into it yourself.
Yeah. So now let's come to this. Okay. So there's a market opportunity that an entrepreneur has been able to identify. He or she believes with a small team that they can do something about it. They are excited. Beyond excitement, when they approach an investor, okay, when is the right time? How much MVP, minimum viable product they should have in terms of users? And I'm talking a broad question, but if you have an example or two.
I think uh, there's one more part to this, dimension to this, which is that there is a market opportunity that may exist today as a market and in a very clear market size TAM perspective. But I actually like entrepreneurs and startups, and I've noticed that we have invested the most in startups where there's been a very unclear market size or a TAM, right? And there is a problem that somebody is trying to solve, and that translates to the market opportunity. And it also means some amount of consumer education. And very often we've invested in B2B. So it also means market development. So it's not necessarily an existing market that they're going and playing in, because we tend to invest in innovative startups. Very often there's a market development effort. And so the opportunity is more a problem that you're trying to solve than, let's say, a sized market or a TAM. Having said that, I think your question is important in that when do you raise money? I was trying to point out earlier, depends on who you are, what is the type of startup you are. But if I was to try and generalize it, I think as you evolve as a startup, there's different types of capital. It's important to understand there's different types of capital and what those different types of capital are. There are grant fund programs run by governments, run by foundations, which is typically free, relatively free capital, because they come in the form of grants, and especially startups which are more in the social impact space or in healthcare or in areas which has some level of impact, sustainability, are startups that can access many of these grant programs, right? The second source of capital is really, your savings, and your friends and family. And when I say friends and family, I think very often it's this boss maybe that you work closely with at a company, and he says, this guy is fantastic. I know him. Whatever he does, he'll succeed. So let me invest in him, right? I say that and not like go to your uncles and aunts and then you don't know. If you lose money, it's a harder sort of conversation. You won't get your, Diwali sort of dinner and so on, right? The third set, which are what we call angels, are the guys who don't really know you, right? Not for a long time. They've met you a couple of times, or maybe, you know, they like you from those meetings and they're able to gauge. And angels and us as VC funds, I think one of our skill sets is to be able to judge people early and quickly in terms of their ability to become successful entrepreneurs. And so it could be a little bit of, okay, we've had a few conversations. I like what you're saying, but it'll also be show me a little bit of proof, show me something, show me that you built something as a product. So they come in a little bit later. A few angels do come in early when the idea itself is extremely exciting, or when it's a problem they understand well because they have been in that space for a while, right? So let's say somebody is in the construction industry, running a huge company, or he's a CEO of a huge company, and he knows you're addressing a problem that he knows he's facing on a day-to-day basis. Those type of guys would then invest in you either as an angel or through angel networks that now exist. But it'll always be one person who knows the space well, who will lead around even in an angel network. That's how it's typically done. And then there are guys who are the early stage funds, and there's funds and there's funds and there's funds and there's funds, right? So if you're raising seed capital, go to a seed fund. If you're raising pre-series A, go to pre-series A. Look at funds, look at where they invest, do your research. And then don't waste your time going to a Series B fund when you're raising seed capital, right? There are a bunch of incubators in the ecosystem. You may want to get incubated. Sometimes they put in a small amount of capital as well to help you in your early progress. So I think you start early with options that are relevant to your sort of where you are as an entrepreneur. But I'll also tell you this, there are guys, it also depends on who you are. If, for example, we all know that Mukesh Bansal went out and with his second effort, I think raised 15 million without having too much to talk. He had a lot to talk about, but less to show, right? So So it's a mix. When we as a fund look at it, let me tell you how I look at it. There's three aspects that I look at, or three vectors typically in terms of risk that I evaluate. One is the team and everything related to team, and there could be 100 factors under team. Uh, it could be, the second part will be your product and technology, and the third part will be the market and the opportunity, your traction, the competitive landscape. So these are the three broad vectors. And when I invest, I'm trying to find what is the resultant risk of these three vectors, right? You wanted an example. So here's a good time for an example, right? So we invested in a seed round in a company called Detect Technologies, which is basically four guys. They were IIT Madras guys, four students, almost straight out of college. And these guys, I mean, I met one of them at an event. He said, I need to talk to you as having some lunch. And we were just standing there and chatting. And he said, this is what I'm doing. And his product sounded so innovative that I said, listen, if you're coming to Bangalore, you drop by. He came to Bangalore the next week. The more he spoke about his product, the more fantastic it sounded. And I said, wow, this is innovative. And this was when he had perhaps half a customer, maybe somebody running pilots, and no paying customer, but somebody running pilots. But the opportunity seemed huge. The problem that he was solving seemed huge. Fast forward, 2.5, 3 years, and he is closing a multi-million-dollar deal with one of the largest oil companies in the world, if not the largest oil company in the world.
Wow.
For a global contract. And so this is, a bunch of young guys, no real experience, got together, bright guys, personable. Market was still early because their product was extremely innovative, but the problem was a big problem that they were solving. And not just a big technical problem, it was a big dollar value problem. And very often it could be the other way around, right? Your product is not as unique, it's a little bit less. We're talking to one company which would be perhaps the third in its space. But we just like the entrepreneur so much because he knows the space so well. Extremely humble guy, but he understands his space extremely well. There's a company in the insurance sector. And he's got it. He's very realistic about what is doable, what is not doable. The market opportunity, it's a market which has been around for a long time, extremely underpenetrated, insurance in India. And the product itself is a little bit more me too. Even if he has some differentiation, somebody will catch up quickly. But we've got two other things, vectors, which are, extremely strong or where the risk is lower. And so it's a mix of these three things that we look at when we invest in an entrepreneur. And I'm just saying this because I'm just trying to give a sense of maybe how, some of us think at least. And then you decide which fund goes in early, which will take bigger risks on each of these three, which will take lower risks, and also how to position yourself. Like if you go early, you need to position yourself as being a strong team, more importantly than, later if you already built product. So when you're building product, it's got to be the uniqueness, it's got to be the size of problem. And then slowly, as your conversations go on, if you hit Series A, it will be traction. Who are the customers you have? What are the type of revenues? What are the deal sizes with your customers? What is the strength of your pipeline? What is the next level of team build out? So the conversation changes as you keep raising capital. And you've got to know who to go to, but also when you go to somebody, how do you position yourself at that specific point in time that you're raising capital?
Yeah.
I think the relationship with the co-founders and what they bring together to the table is also important. And you could have single founder situations where the guy is just so good that you feel like, he's going to manage. But you could also have situations where there are 3 founders, 2 founders, 4 founders, and how well they are able to get along, I guess, is very, very important. The ability of them to complement each other, their ability to, maybe divide responsibility and say that because there's so much to do early stage, you want to be able to divide responsibility. One says, I'll be product developer. The other guy says, I'll be customer and investor facing, and so on and so forth. Right?
And how do you figure that out before investing? Is it by the conversations you have or you actually see them in action?
So we recently, so it's hard to see them in action. It's conversations, it's body language, It's so we never like to meet entrepreneurs. I actually walked out of a deal. I'm not joking. We traveled, two of our partners at my fund. We were really interested in an opportunity which looked extremely good. And we traveled all the way from Bangalore to Delhi to meet these two founders of a startup. And we were like, this meeting and we're done and we're going to close it. We had individually, I had met both the entrepreneurs, two of them, and my partner, I think, had met one of them. And we said, let's do this joint meeting. And we realized, we landed up at Delhi, we went straight to their office, and one guy was there, the other guy wasn't there. And then we got talking, and we realized we'd never met them together. No meeting with either of us, and there must have been at least 4 or 5, we'd never seen them in the room together. And I just spoke to my partner and I said, listen, I'm a little bit uncomfortable because these guys know that two of us are coming all the way, right? To meet two of them and see them together in action. And these were both highly competitive guys, right? And highly competent guys as well. And unless you see them gelling, you could easily get into a situation where one is moving in one direction, the other is. And so we didn't get comfort. We walked out of that deal. Now, let me tell you the other end of the spectrum, right? Us as investors, the has been particularly bad because we can't meet entrepreneurial teams within a room.
Yes.
So much harder to transmit and to see the vibe, the body language when you're doing Zoom calls, right? I can only see quarter of you or maybe a third of you. It's been harder, but there's this one team, and there's a team called Riksha, something in the edtech space. And these guys, this team, when they came, four guys, when they came on their Zoom call, I could feel their energy all the way from Pune through the internet connection, sitting in Bangalore. And it wasn't just me. When our entire team, right, and about 10 of us from our fund team had a conversation with them, the consistent remark I got, or I could hear from all my other colleagues as well, was exactly this, right? The passion, the energy, the synchronicity coming through in the conversation. And therefore, we did that without actually meeting them in person. And I think there are many, many research efforts where one of the key reasons, I won't say it's the top, but one of the key reasons for startups failing has been the founders not being able to get along with each other.
Yes.
We're very careful about that.
Yeah, most partnerships, right? Even if you're not raising funds, we speak about partnerships falling apart because of too many emotions all over the place when things start to happen. I want to come to the last two questions. One is about Bharat Fund, and of course, what are you looking at in the coming years and the entrepreneurs that you aim at? You've told a lot about it, but I want people to be able to find the community wherever applicable. Just before that, I want to ask you the very important question that I asked you in my request appointment to do this interview. We see the good news. All right. If I pop up in where companies getting funded, I go to Crunchbase, I go to Prequin, I go to, there's so many pitch news, I think. And I'm always seeing companies that are getting funded, or most of it, 80% of the news. Why is that? Why don't we come to know about companies that are failing? We do come to know when they are failing at a much higher stage, but at a startup stage, because it's giving us as entrepreneurs a wrong hope of how the funding industry works, right? So if you can throw some light on that, and can you talk about that? Failures that there are tough decisions that you make. You've given an example, but if you can show some light.
Sure. You touched upon an important point. We need to know, where the points of failure are. I think there are many that could happen in a startup's life. And I told you this, you can prepare for n number of things, but the n+1th event will happen to you. The only way is, as a startup founder, you got to be humble. And this is not false humility. This is, you got to be humble because you don't know what's going to hit you from where at any point in time. And this happens, doesn't matter whether you're a unicorn or whether you're like just about doing your first, you're not even got MVP. The second part is be alert, and the flexibility to not or to react is going to be an important piece. And I think so important is the flexibility, that leanness, the ability to quickly sort of shift into some other gear is, I would say, the second important thing that you need to have and inculcate as a trait, or to develop as a trait as an entrepreneur, right? And you also need to be very nimble, looking around to see where there are opportunities. At the same time, and this is why I always say entrepreneurship is dealing with the contradictions, right? So at the same time, you don't want to be all over the place, not going behind an idea well, and you're jumping from A to B to C. I've seen some entrepreneurs do that, and they aren't successful because they haven't given an idea its due. And so this is the contradiction, or one of the contradictions I was talking about earlier. How are you nimble? You are able to adjust, but at the same time, you follow certain ideas and you say, hey, listen, see it to a logical conclusion. And that's a very hard, thin dividing line to tread. And I think the fourth one is, as a society, and it is not just entrepreneurship, the ability for us to celebrate failures, the ability for us to celebrate differences, the ability for us to understand and believe that the guy who's failed, or if you failed, you are one step closer to success because you knocked one failure out of your quota. It's something that we need to appreciate both in the entrepreneur community as well as in the as well as a society, right? My first company out of the Bharat Innovation Fund, a company called Entropic, the entrepreneur, this was his second startup. His first startup was a failed startup. He ran it for 2 years. His second startup, well, I can't call it a success yet. There's very many parameters for success, but we invested in his seed round about a little bit over than $1 million. And we recently had a follow-on round where we raised about $8 million, in which we participated, but we also got another international fund to come in. And so he's on the way. He's got international customers, very big names or logos on his customer slide of his deck. And so, but his first startup failed. And he's probably learned from that to say, listen, these are the things I'll do well here. And there are, I'm sure, learnings that are going to keep coming as he goes ahead and scales this as well. But I do think we've got to learn, I think, from failure. Everybody says that. At the same time, my other caution would be, very often we tend to think that because somebody, and this happens with us investors as well, I see this, observe a lot of this happening with us as a fund and my other colleagues in the industry. If there is a startup that has failed in a particular area or a sector, we tend to be a little wary of touching that sector. And just because one set of people failed at something 5 years back, it doesn't mean that today a different bunch of people attacking the same problem may not fail, or the problem tweaked. Things change. There's a dynamic nature to the world, right? And so there are very often entrepreneurs who are a little early with their ideas, and therefore there's failure. Similarly, just because you did something wrong, let's say, for example, you spent too much capital and you saw a startup where there's too much of capital being pushed into something, you cannot, and those guys didn't do well. It doesn't mean that that is necessarily, when you think of another startup, that they shouldn't be pushing too much capital into the same thing. Let's say into marketing. There is a certain specificity with your efforts. So don't, be careful when you learn from failures. Don't blindly apply them, but at the same time, do learn from them and see how specific they are to you and your context. And don't get discouraged by failures. I mean, at the end of the day, as you pointed out, we all fail. We know Michael Jordan's, sort of famous quote on this, but it translates into something like, I made that so many successful shots in my career because, and I think he had about 100 times the number of failed shots that he had missed. So
yeah, I think it just failed better. It's practice. That's what he also said, that I practiced so hard. And every time you fail, just fail a little better than last time, which is your learning. And that practice, when you show up to the game, it's just going to be sometimes easy for you. And it's looks to the world that it was so easy for you. But it's the failures that you practice through that made
Exactly.
it easy at the end.
Exactly.
So many people, wow, that's such a good note to leave entrepreneurs with. And I would love for them to know where to find Bharat Fund. What are you looking at in the space? There are a lot of people who will watch this year, because we have a responsibility to not create a bubble. We need to create a great opportunity space in India for the coming years, right? So what does Bharat Fund look at?
Uh, Let me come back to your question, right? So Bharat Fund, we invest out of two vehicles. One vehicle invests in early stage deep tech ventures that are globally competitive. And so we're looking at opportunities or startups that are creating cutting edge tech. Many of our startups out of this fund are B2B, and many of them are already addressing global markets. We do invest in startups that may not have already been addressing, but we do think they have the promise to address global markets. So typically the pathway is they'll build products, get into good Indian enterprises, refine products, and then start taking it global. And so that's one area that we invest in out of our fund, Bharat Innovation Fund. Our typical stage is we come in at a pre-series A stage. We do series A, which is our sweet spot, and we've participated in some series B rounds, but typically that is with other co-investors. And so that's the Bharat Innovation Fund. We invest out of another vehicle called the Bharat Inclusion Technology Seed Fund, which also comes under the Bharat umbrella. And this fund focuses on startups that are using tech as an enabler, not deep tech necessarily, but just tech as an enabler to bring about efficiencies or to uplift the lives in multiple ways of people who are at a slightly lower economic advantage than some of us who are more of the privileged lot. So a lot of these startups play in tier 2, tier 3 markets, or they're servicing customers who are, let's say, perhaps gig workers or a auto rickshaw driver, and let's say perhaps providing education to this, or providing healthcare, or providing some sort of a financial product to people who are underserved in terms of the offerings that were available to them, which some of us who are more privileged and in urban settings, have a greater access to. So we are investing out of this vehicle as well. We typically invest up to $1 million or so in a startup from this vehicle. And so between the two portfolios, we now have, I think, about 12 companies that we've invested in, continuing to invest in both these spaces. So looking for entrepreneurs who are doing anything exciting which can be cutting edge global technology. I think, see, I'll tell you one thing, Ashish. I'm a very, very strong proponent, and this comes from the last fund I set up, is also that a lot of people think about India as this great consumer market. And therefore, there are a lot of investors saying, hey, you have your Flipkarts, you have your Swiggies, so what's the next big consumption story coming out of India? And there are a lot of funds dealing with that. And I think they're all right. But there are a lot of investors and capital flowing in there. I believe that apart from this, India is also a great garage for global innovations. And I do believe that Make in India for the world is, or Build in India for the world, so that I don't use somebody else's slogan, right? Build in India or Create in India, but which is globally competitive, is really something that we should be thinking about as the, let's say, what India could be about, and a competence or a capability matrix that is sitting within India. And so we believe that that's an opportunity that we as a fund can write, but also want to support entrepreneurs, who are doing that and who are thinking about the world as a market.
Yeah.
So that's our thesis on that.
Wow. Yeah, I think you don't always need an American approval, right?
Yeah.
I believe in what you're saying. It's so true, guys. Like, you need to know that you are smart, you're intelligent. Failure is a part of it. So if you're listening to this, just remember this as you fail through your journey to success, right? You will have one deal that will work for you and it will make you the money, but it's this process that's important. It's amazing. Thank you so much, Ashwin, for all the time. You've given us more time than what I requested you for. It means a lot.
Thank you, Ashish. It was fantastic talking to you. Hopefully we can have many more conversations.
Yes.